What's up, everyone? Welcome back to the Cash Flow Desk. Let's get into it. Today, we're diving into a topic that's kind of like the plumbing of your finances. Super important, not always glamorous. Your chart of accounts. We're going to cover what it is, how it works, and why it's such a big deal if you want clean, usable reports. Alright, real quick. What are we talking about here? Your chart of accounts is basically the blueprint your accounting system uses to organize all your transactions. It's like a giant sorting system. Every dollar that comes in or goes out gets assigned to a category here. Instead of just saying, we made money or we spent money, you're labeling what kind of revenue it was or what the expense was for. A lot of systems like QuickBooks, NetSuite, Xero come with a default chart of accounts, and it usually includes 5 major categories. First one is assets, stuff your business owns, like cash, equipment, or inventory. Second, we've got liabilities, stuff your business owes, like loans or accounts payable. Then third is equity, ownership or retained earnings. At number 4th, it's revenue, money coming in. And the 5th one is expenses, money going out. And under each of these, you've got accounts and sub-accounts. So under expenses, you might have a few categories. You've got 6100, marketing, and then 6110, digital ads, and just below that, there's 6120, events, and so on. It's kind of like a tree. The trunk is the category, and the branches are the accounts. So why does any of this matter? Because this is what controls how your financial reports look. Your P&L, balance sheet, cash flow statement, all of it pulls from your chart of accounts. If it's too vague, you don't get the insights you need. If it's too detailed, it becomes a mess to manage. Ever seen a profit and loss report with 30 different versions of marketing expenses? That's what happens when your chart of accounts grows without guardrails. A good chart of accounts is clear, clean, and built around the way you think about your business. Let's say you run a product company. You probably care about things like revenue by sales channel, costs by product line, inventory value, and shipping and fulfillment costs. So your chart of accounts should make those things easy to see, without you needing to dig through 14 spreadsheets or decode cryptic account names. A few common mistakes we see: having too many accounts for the same thing, and using inconsistent naming, like FB ads in one place and Facebook advertising in another. One more thing is not grouping revenue and expenses by useful categories like department or region. It happens to a lot of businesses, especially as they grow, hire more people, and layer on more tools. So that's your chart of accounts. It's not just an accounting tool, it's the foundation for everything from reporting to budgeting to decision making. In the next video, we'll walk through how to actually optimize your chart of accounts so it's easier to use and easier to grow with. If this was helpful, hit like, subscribe, and stick around for part 2.